Powell admits the Fed has inflation problem that needs aggressive action. So, Federal Reserve Chair Jerome Powell spooked investors Monday with an admission that the central bank has an inflation problem that could require an even more aggressive approach to tamp down inflation than previously expected. U.S. stocks fell after Powell said the central bank would move expeditiously to address inflation, potentially by raising interest rates more sharply in the future than the quarter percentage point hike announced last week. By raising rates at a faster clip this year, the Fed would be dialing down the flow of cheap money that allows bets on riskier assets and fuels higher stock prices. Powell is waking everyone up after investors got comfortable with the narrative that the Fed's got your back, said Sam Stovall, chief investment strategist at CFRA, Bloomberg reported. The Dow Jones Industrial Average sank more than 200 points on Monday, or by about 0.6%, and the S&P 500, the broadest measure of U.S. stocks, dropped slightly, and the tech-heavy Nasdaq fell about 0.4%. The labor market is very strong and inflation is much too high, Powell said at the National Association for Business Economics conference. There's an obvious need to move expeditiously to return the stance of monetary policy to a more neutral level, and then to move to more restrictive levels if that is what is required to restore price stability. Powell added that if Fed officials determined it was appropriate to move more aggressively by raising the federal funds rate by more than 25 basis points at a meeting or meetings, we will do so. Inflation surged to a four-decade high of 7.9% in February, far higher than the 2% level the Fed deems acceptable under normal conditions. The cost of fuel and goods continue to rise, with experts warning that trouble could get worse if the Russian invasion of Ukraine escalates. Powell said the Fed would maintain its commitment to keep inflation near 2%, a level he suggested could be reached within the next 3 years as the central bank tightens monetary policy. And the Fed's quarter percentage point hike following its meeting earlier this month marked the first increase of its kind in 3 years. The small bore increase of only 0.25% soothed investors who'd worried a more aggressive Fed would stop the flow of cheap money flooding markets that helped send stocks sharply higher in the wake of last week's decision. And basically, the thing is, there's not really much else to say, but basically, Jerome Powell is basically saying we got a pretty serious problem and we're going to have to do something about it.